So officially welcome. If we have not met before, I'm Drew McClellan from Agency Management Institute, and this is the first of our member-only webinar series. So we always offer at least 4 webinars that are only available to members, and this is the first of them. We invited Craig to kick off the year for us because of some changes in legislation and some legal and tax reporting that we all have to do starting in 2025. But the data gathering needs to begin now. And so this felt like while not the sexiest, funnest topic in the world, probably a pretty critical one for all of us. And so no better than our go-to preferred partner when it comes to taxes and tax strategy than Craig Cody. So if you're not familiar with Craig, he's made several appearances on the podcast. He's with us at the summit every May and is one of just a handful of partners that we've designated as a preferred partner based on the volume of AMI members he works with that give him a 5-star rating. And so I will also tell you, Craig has for many years been Danielle's and my personal tax advisors, and he's my go-to when we're doing a lot of succession work or M&A work for agencies. He's always the guy that we turn to first for complicated answers. So he is a trusted resource inside the AMI community. So Craig, I'm going to let you drive from here. You should be able to share your
Sure.
screen and do all the
Yep.
things, right?
Great. Well,
So it's all yours.
thank you. Thank you very much for having me. Hello, everybody. A lot of familiar faces. I thought the beginning of the year would be a good time to go over the Corporate Transparency Act that I believe was born out of, I think, 2020, some tax act. And it's a pretty, what I would consider onerous reporting requirements for businesses. So I want to take you through it. It's going to be PowerPoint. It will be fairly brief. You can feel free to ask questions as we go through it. All right.
I'll keep an eye on the chat window. So if you have questions during Craig's presentation, let's put them in the chat window, and then we'll certainly stop and do live Q&A. And at that point, you can unmute yourself and just ask the question and have a conversation. But just to keep things rolling, and then Craig, I'll just look for an opportune moment to jump in and interrupt you during the actual.
Okay, great. Okay, so give me a second here. Okay, so you can all see my screen, correct?
Yep,
you're muted.
we can. Yep.
Okay, perfect. Yep. Okay, so the Corporate Transparency Act, what I call compliance nightmare. And we'll go through what it is, what the requirements are, and really why it is a nightmare. It's such a nightmare that the forms only became available in like the last 2 weeks. All right. And it's something that filing began January 1st, or could have been began. So we're going to go over why you should care about the Corporate Transparency Act, an overview of what the act is and what the beneficial ownership reporting is, and the deadlines and penalties. I don't know, show of hands if anyone, is everybody aware of what the Corporate Transparency Act is? I would imagine most people are not. They're making this very hard, okay? This is something that happens in a lot of other European countries, and it's typically you do it once a year, maybe with your tax filing or something like that. But FinCEN, who is actually in charge of this, it's not the IRS, has made it quite cumbersome, in my opinion. So we'll go through that, all right? And this is kind of, what is the Corporate Transparency Act? It relates to corporations, but it's not just corporations, okay? And it's basically the government and FinCEN wanting greater insight into what's going on out there with businesses. Not like anything should be flying under their radar anyway, all right? And then we have the beneficial ownership, which is information reporting on who the beneficial owners are of these entities, okay? And it gets really crazy because if you're in a state like California, where it's a community property state, if you're the owner and you have a spouse, your spouse has to also be reporting. All right. So there's a lot of things to this that just make it very cumbersome. Enforcement. We would all think, oh, the IRS is enforcing this. No, it's FinCEN, which is the Financial Crimes Enforcement Network, which if you ever had to file what we call an FBAR with your tax return, if you have some kind of foreign bank accounts and stuff like that, these are the people that enforce this. And I think the overall goal here really is for them to cut back or cut down on people that are hiding money offshore, right? I think they went about it the wrong way, and I think most people that are dealing with this would agree that they went about it the total wrong way. So, why should you care? Okay, because basically, all small and medium-sized businesses have to file the beneficial ownership information report in 2024. The effective date is January 1st, 2024. And there's a bunch of different guidelines of who has to report and when you need to report, right? Analysis and data collection could be complex. In certain cases, it's so complex, I can be somebody that needs to be reported as a beneficial owner of your business. All right. Doesn't necessarily mean you have ownership. And why it's so crazy is because penalties are $500 a day up to $10,000. So basically, if you're 30 days late, it's a $10,000 fine. And it's not like, getting on the phone or writing a letter to the IRS to get it abated. All right. It's still going to be the wild, wild west. We're not sure what's going to happen. So the three most important questions is a company a reporting company? So meaning your business, is it a reporting company? And when I talk about your business, it could be that piece of real estate that you have in an LLC, all right? It's not just the business that you're operating in. So if you have multiple pieces of real estate and each of those are inside of, say, an LLC, those all have the reporting requirement, okay? So first are you a reporting company? And most of us on here are a reporting company, okay? And then the next question is, who are the beneficial owners? So then you have to figure out who are the beneficial owners. So your COO could be a beneficial owner, all right? We're gonna go into that. And who are the reportable company applicants? Like, meaning who needs to actually file this form? So that's what we'll go through this. What's a reporting company? It's a domestic reporting companies are a corporation, a limited liability company, or any type of company created by the filing a document with the Secretary of State or similar. So mostly it's, when we deal with, it's you formed an LLC with the Arizona Secretary of State or California, or you formed a corporation, all right? So examples would be a Delaware limited liability company, so that's a reportable company. A California for-profit company, so that's a corporation in California, that's a reportable company. We're not talking about owners associations. And if you're a general partnership registered with the Secretary of State, that's a reportable company. Seems pretty easy so far, right? No rocket science here.
I feel a butt coming on, Craig.
Yeah, yeah, there are. We're not going to go into foreign companies because, and we're talking, when we talk about a foreign company here, we're talking about, a company originally formed outside of the United States. So we won't go into that. Okay. Here's the sliver of good news in this. There are 23 total exemptions. Okay. Highly regulated companies, CPA firms, broker dealers, investment companies, tax exempt entities, those are exempt. All right. really doesn't affect most of us on here, okay? Here's the one that's going to affect most of the people in, let's just say, the agency world. If you're a large operating company, and this is someone with 20 plus full-time employees, you have a physical presence in the US, meaning you have a physical address, and you have more than $5 million in gross receipts, okay, you are considered an exempt entity and you don't need to comply with this. Basically, what this boils down to, the FinCEN is looking at it as, if the bigger you are, the less likely you are to try and hide money outside of the United States. That's the way we look at that, all right? If you're an inactive entity, you don't have to file, all right? And then determining whether you're inactive is another question. So we'll deal with that on another day. But for most of us, if you're 20 full-time employees, you're physically located in the US, and you have more than $5 million in gross receipts, you're exempt, you don't have to file. Great thing.
So this is really for smaller agencies.
Yes. Now, with a lot of agencies going to having a lot of contractors,
Right.
all right, now they fall under the umbrella where they'll have less than 20 employees and they will have to file.
Right. Right.
All right.
Yep.
And then if you go from 19 to 20, how does that affect you? There's a lot of, and these are things that are still somewhat unknown. Okay. Then who is a beneficial owner? Okay. So you're a beneficial owner if you directly or indirectly exercise substantial control, or you directly or indirectly own or control 25% ownership interest. All right. So if you're married and you both own 12.5%, well, you're a beneficial owner. All right. Husband and wife owners of marketing agency operated through an LLC, you're a beneficial owner. The COO of a 10-employee marketing company, you're a beneficial owner. All right. The spouse of an owner of an LLC or corporation in a community property state, you're a beneficial owner.
So, Craig, is it fair to say that if a smaller agency has a leadership team that is really driving bigger decisions around the agency, would all of them potentially qualify?
They all potentially qualify, depending on what they do in the leadership team. All right.
Okay.
So this is why it gets really crazy, because
Right.
when we talk about the different timelines, so if this was a once a year thing, it really, it would be some compliance, but it would not be something that we really need to worry about.
Right. Right.
But as we go in, you'll see it's not just a once a year thing. This here, we just talk about, ownership interest, substantial control. All right. I'm not going to get into that, but suffice it to say, substantial control, figuring it out isn't going to be that hard. Okay. It's going to be the reporting of it that's going to become a problem when you have multiple people that have substantial control. And later on, if somebody wants to talk about this, we could go through this in questions. Okay. The company applicant, okay. Basically, this is the person that's filing the registration document, okay? And there's a couple of different deadlines, all right? All right. And if you're a new company formed after January 2024, you must report who the company applicant is, all right? So anybody since January 1st of this year that's formed an LLC, purchased a piece of real estate, formed another entity, you now have this other thing that you must do. All right. And when we look at timelines for filing, that's where it's going to get a little crazy. Here's what needs to be reported: legal name or DBA, physical address, where you were formed. So if you're a New Jersey domestic corporation, you have to put that in there, and your tax ID. Straightforward stuff. This is typically not going to change much. Information on beneficial owners. This is where it gets a little crazy. Once again, you need the individual's name, their date of birth, their address, the ID of their passport or their driver's license or state local ID. And this information will wind up getting uploaded to FinCEN, okay? The copy of the identifying document. So if you're using your passport, all right, then you need to do that, all right? And we're going to recommend to people that if you have a passport to use it, because a passport is typically good for 10 years, whereas depending on the state, it could be on your driver's license, could be anywhere from 3 to 5 years. And as we get into this, you'll see why that makes a difference. What needs to be reported and how, okay? Basically, this FinCEN has a secure filing system that no one has tested out yet. Most of the bigger tax software systems are coming out with a way to file with FinCEN, the way they currently file certain forms with a tax return that are required to go with FinCEN. So this will just be a little bit of a hoop to jump through, but this isn't the big thing, all right? This is what becomes the issue, okay, the deadlines. Reporting began January 1st of 2024. So that means entities formed before January 1st, 2024 don't have to make their first filing until January 1st, 2025, right? Entities formed after January 1st, 2024, actually now there's a slight change. They have 90 days to file. So originally it was going to be 30 days. So if you formed an entity, you had 30 days. In addition to all the other things that you need to do, you had 30 days to make this filing. They've extended it to 90. Still not that great of a deal. So if you're a current entity and you were formed before January of this year, your first filing doesn't have to happen until next January, right? If you're a new entity, okay, you have basically 90 days to file. Here's where it gets tricky. Change of information filings. This is where everybody is going to get beat up. If there's a change of information, which means maybe you move your building address or your business address gets moved, or if you're a beneficial owner and your driver's license expires, okay, you don't move and it expires, or your passport expires, you get married, you get divorced, okay, anything changes, all right, you have 30 days to make a corrected filing, right? So think about people's, they wait till the last day to get their driver's license renewed, all right? Once that happens, you have 30 days to do another filing. And if you don't do it, it's $500 a day. So, and then we talked about exempt reporting companies. If you go from being exempt to non-exempt, you have 30 days. So this is really the biggest headache that's going to come of this filing is if you have one person or you have 5 people that are considered beneficial owners, you need to be on top of this because you only have 30 days to notify FinCEN of any changes. And we say, okay, well, how is FinCEN going to know? Well, they're going to know when you file your updated information and your driver's license is updated, and then they see, well, the last one was updated or expired on the 1st, and you waited till the 5th of the following month to notify them, all right? And they're telling us $500 a day up to $10,000. So I don't want to be that test monkey. Penalties, 5,000. I mean, I wouldn't worry about criminal penalties unless you're doing something, to really do it on purpose. All right. Questions? Anything in the chat, Drew?
Nope, not yet. So we have to start producing these filings January 1 of 25, right?
So they have to be filed by January 1 of 2025.
Okay.
All right. So what we are recommending right now is not to do any filings until the 4th quarter.
Okay.
All right. Because if we file today and all of a sudden somebody's license expires, now we only have 30 days to report that change.
Right.
So if we wait till the 4th quarter and do the filing, we have 2 months. So
Right. So Katie, that answers your question about is there value in waiting?
Yep, it sure does. And Craig, I'm just a follow-on question a little bit to that. What I'm not clear about is, say we file for the first time in the fourth quarter. Is it that we never have to file again unless something changes? Or like, do we have to file every year?
as of right now, it's only when there's a change. So
Okay.
your driver's license will expire, your
Mhm.
passport will expire, so you will have updates. And let's just say, Katie, that you have 3 pieces of rental property. All right.
Mhm.
Now you need to do the filing for those. And then if your license changes, okay,
Yep.
you need 3. So there is a way to get a number through FinCEN. So if your name is on a bunch of different entities, there's a way to get a number with FinCEN. So you do the change once and they allocate it to all the entities that you're under. And that's what we're going to recommend for people if there's multiple entities. All right. A lot of times people will kind of create an LLC because they're thinking about doing something. This is going to be something that's going to stick in their head that, do we want to do this or not now?
So someone said, can you go back to the description of a substantial person and walk us through that again?
Sure. Okay, so at a very low level, okay, it's somebody that directly or indirectly exercises substantial control, all right? Um, or owns 25% of the ownership interest. And if we go into this, you can't really read it, okay? So senior officer, so any individual holding the position or exercising the authority of the president, CFO, general counsel, CEO, COO, okay, or any other officer, regardless of their title, okay, they are considered to exercise substantial control. All right. I think those are the issues we're going to have to deal with. Now, if you have a leadership team and they don't have a title, okay, do they count or do they not count? All right. Um, I think we want to err until we have really good information on this, and there's not really good information, and it's probably going to be years until we have some really good information, but you're going to want to err on, the side of caution and list those people that we think are, exercising what is considered substantial control. Does that answer that?
Does a fractional CFO have substantial control in your opinion?
In my opinion, yes.
And really, nobody knows how this is going to be interpreted, right?
Correct. Okay. We just know what they have out there. All right. And literally, they just opened it up like a couple of weeks ago. So, there are different camps out there. Okay.
Yeah.
But, at $500 a day, I'd rather be err on the side of caution.
So in this example, you have a fractional CFO. We decide that he is substantial. A VP would be an officer. Any of those folks, if any of them leave by their own volition or ours, we have to report that change that they are no longer a substantial person, right?
Within 30 days, yes. Within 30 days.
Who
It's crazy.
who do you think should be helping us do this? Is this our tax advisor? Is this our corporate attorney? Is this like who should own this alongside of us?
So in some states, they consider this practicing law. Okay.
Okay.
In most states, they don't. Okay, because CPAs are already filing with FinCEN on a regular basis. Right. In our opinion, you should be working with your CPA. Hopefully, you're speaking with them on regular basis. All right. You should be working with them to make sure you get this done. But if you're only working with somebody that you see once a year, all right, that's probably not a good partner when it comes to this, right? Because you have the 30-day window that you need to deal with. Okay. We are going to be we'll have a program for this.
Yeah.
All right. where we're in contact with you, sending reminders, et cetera, every 30 days to make sure if there's any change, it gets reported. All right. But you also have to remember, I mean, most people are going to know what their, executive team is doing if they're moving and stuff like that. But, now you need a database of driver's licenses and passports and stuff like that. Okay. That's the kind of stuff that we're going to be tracking, because that's what I call low hanging fruit. Those are easy changes. All right. Somebody moving is not as easy. All right. From my perspective, but somebody's license or passport expiring is a different type of change, much easier to check. There are going to be all sorts of companies out there that are going to be offering this. Okay. The thing is, they're all going to offer the initial filing. All right. The initial filing is a bit of a ground ball once you decide who the people are.
Right.
It's
really
the
about
ongoing
maintaining it accurately, right?
That's what the problem is.
Yeah.
And whether it's, corp.net, all these companies that are offering it, they're not going to be doing anything from the tracking side.
Right.
All right.
Next question. If you're incorporated and your spouse has no ownership in the business, are they reportable?
Depending on the state you're in. So if you're in a community property state like California, yes, they are.
Okay. So it's based on that law.
Correct.
Okay.
Correct. And obviously, assuming they have no substantial control. Okay. And depending on what you're, they may not be an owner. Okay. But they may exercise substantial control as per, so, I say, err on the side of caution.
Better safe than sorry, right?
Yes.
Next question. Is all of this going to be done on paper, or will there be an online method of filing or updating?
There will be an online method. Okay. FinCEN, I'm not sure if it's operational yet, but they do have a website where this will be going. I know the major tax services, like we use CCH, they are launching part of it, which will integrate with our tax software, so we can file that. All right. I think most people that are doing it are going to do it electronically, but it's fairly new, so can't be 100% sure.
So again, I just want to reiterate, somebody's asking, so if you have more than 20 FTEs, you're exempt from this. You don't have to do this, correct?
No. You have to have 20 FTEs, have a physical location in the United States, and over $5 million in revenue.
Okay, so all three of those have to be true.
All three of those have to be true.
Okay. So a virtual agency that has no physical presence, no matter what size you are, you would be obligated to do this.
Well, if they're in the US, they probably have a physical,
like mailing
present. Correct.
Okay. You don't have to necessarily have an office.
Correct.
Okay. But you would have to be over $5 million in revenue and have 20 employees.
Correct.
Okay. All right. So I'm not sure that I heard the definitive answer to my question. So are you saying either your attorney or your tax consultant would be good choices for folks to help you report this and monitor and update it? Yes?
Yes. Okay. So let's assume your attorney is going to have a system in place to monitor this in a monthly basis. All right. So there are a number, just to get the filing done, there's a number of places you can go to get the filing done. And you can do this yourself. Okay. And you can do the updating yourself. I'm not aware of any law firms as of now, but like I said, this is all new, that are doing the monitoring part of it. All right. I know of a bunch of accounting firms that are doing the monitoring part of it. We'll be doing the monitoring part of it. But I would suggest that, you work with somebody that's going to help you monitor it. All right. Because it happens.
All right. Other questions? So you're saying, like, would you wait until December of 24 to start this?
We are going to start in the fourth quarter. Okay. So we're going to beginning in June, we're going to start getting all the documentation together.
Yeah, right.
Okay. So we're going to have everything loaded up to send in the fourth quarter. All right.
Yep.
And just like somebody said, the clock doesn't start until you file.
Right.
Also, remember, if you formed any type of entity this year, you don't have that benefit of waiting. You have 90 days from the time you
Okay.
formed a new entity.
Okay.
So that's really important.
So if you bought an agency, created a new LLC to buy the agency, are in the middle of a transaction, you would want to do this immediately after the transaction.
Yes, you have
Okay.
90 days.
Okay.
Okay.
Yeah.
And I would imagine if you're purchasing an agency, you're working with an attorney, they're going to be well aware of this part of it, okay, because it's fresh in everybody's mind.
Yeah.
The initial filing. Now, if you bought an agency on January 1st, but you formed the entity in November, you have plenty of time. It's just the entity has to be formed in 2024, where you have that 90-day window. And originally, until just recently, it was going to be a 30-day window.
Okay. Someone is saying, so let's pretend. So the entity has to file. Does the entity have to file any? Hang on, I gotta scoot up this. Yeah. Does the entity have to file anything or just individuals? If ownership, substantial control of any entity changes, only the individual causing the change has to file, or is all of this done by the entity on behalf of all the individuals?
It's done by the entity on behalf of the individuals.
Okay. So, for example, our COO is not going to be filing this for themselves. We're going to be doing it, and they're going to be one of the people on our list.
Correct.
Okay. So, next question. Let's pretend nothing changes for 3 years. Do we have to file yearly or just when that first change happens?
Just after you do your initial filing, you only need to file additional updates when there's a change. So if you have no changes for 3 years, you have no filing requirements as of today.
Okay. Anybody else? More questions? This seems very poorly thought out.
Oh, it's extremely poorly thought out. Like I said, I was talking to somebody in the UK and they've been doing this filing for years, but it's done once a year. There's a once a year deadline and you do it. All right. Like I said, 30 days, 90 days, it's crazy. There's a lot of things that can go on. You're running a business, there's a lot of things happening. If you don't work with somebody, you're going to have to track passport expiration dates, driver's license expiration dates, people moving, they move. Okay, now we have a new location. If you have a leadership team and they meet the requirements, you have all these people you need to do it for. So it's really insanity on FinCEN's part.
Yeah, this is crazy. Okay, somebody says, I opened a new LLC this year to buy a building, but nothing has transpired yet. We're in the middle of the deal. But because the entity has been formed, do I still need to file within 90 days, right?
So, and once again, this is all new. They say if you're inactive, okay, I would not consider that an inactive entity.
Right.
Right. So I would say you want to file that within 90 days.
Okay. If you're 100% LLC owner, is your spouse a beneficial owner?
If you're in a community property state, definitely. All right. If you're not and your spouse doesn't meet any of the other requirements of substantial control, no.
What if they work at the company?
Like I said, I think I would say if they work at the company, they probably have more control than the typical employee. And I would err on the side of caution and add them to, the beneficial owner list.
What would be the downside of including them? Why wouldn't you just include them to cover your rear end?
Only that their license may expire and you miss it. That would be the only.
Okay,
or
so
their
it's just
passport may
one more
expire.
person
Yeah.
to keep track of.
One more person to keep track of. But if it's done right, whether you have your own system or you work with somebody with a system, those type of changes will be much easier to keep track of.
Yeah.
Okay.
Okay. Okay. Other questions? What is considered an inactive entity?
That's a good question. Okay. Normally, I would say an inactive entity is something that's sitting on a shelf with nothing at all. Okay. No bank account, no anything. All right. So typically, if you're buying a building, you're going to open up a bank account. I would not consider that an inactive entity. Once again, I'm going to always err on the side of caution. All right. I rather file.
Right.
Now, typically, let's just say you have a building, all right? You have a business. So you have a filing requirement anyway. So what we would do is we would register you with FinCEN. So you only have to make the change in one place, and it gets allocated to all the things where you have, substantial control.
Okay. Other questions? This just seems like stupid busy work.
It is stupid busy work. Okay.
And
Now,
help me understand, what do they think they're going to catch, or what is
Yeah,
preventing?
my question.
Like what's I mean, I get you're talking about like shuffling money offshore or whatever, but I don't get what they're trying to catch with this. Maybe I'm missing it. It's obvious to everybody else.
they're just trying to catch people that are trying to fly under the radar. Okay. I don't know what this is going to lead them to do. Okay. If you open up an LLC, what is that going to do? Maybe it's just going to make it easier if they find out, somebody is doing something illegal somewhere, and then they could pop his name into the database and it's going to show what other entities. All right. So where people play that shell game, all right, that may be just one part of it. But they've made it overly cumbersome with the dates and the deadlines.
Yeah, that's for sure. All right. Other questions from anybody? All right. Craig, since we have a little bit of time, anything else on the horizon for tax strategies for 24, or any other changes that are already in place or you think are coming down the pike that we should be thinking about from a tax perspective as we go into the new year?
I think, too often people wait to the end of the year to start planning.
Yeah, for
All
sure.
right.
Yeah.
Have those conversations now. Don't wait. That's what I would say. So if you're not already doing it, have those conversations now and continue them throughout the year.
Yeah.
All right. And get your CPA's take on, this whole Corporate Transparency Act. See what they have to say. What are their suggestions?
Yeah. Yeah, I
There's
will say
no-
unsolicited, one of the things that I value about working with you is that we are having ongoing, regular strategic conversations about managing our tax liability starting now, so that we're not in November going, oh crap, we have to buy a car or we have to do a thing. We've got a good strategy in place and lots of options, and that helps us manage our obligations, obviously legally, but also so that
Right.
we're paying more.
Right.
Than we do.
And obviously, if we don't need a car, we don't want to buy a car because, do I want to give it all away or give a third to the government? I'd rather give a third to the government than give it all away. And that's what tax planning is, trying to figure out what's the best way to go about things and how to, make it all happen. And, hopefully 2024 is going to be a really good agency year.
I hope so.
2023 was a different year.
It was brutal.
But, people can only hold on to their, advertising budgets, et cetera, for so long.
Yep.
So, we're hopeful, and what we're seeing is it will be a much better year than 2023.
Yeah, we're seeing that too already. We're seeing signs of that. So early signs in fourth quarter and going even into January, which normally is a very flat month for agencies. We're seeing more new business activity and stuff like that. So fingers crossed.
Right.
Anybody have any general tax questions for Craig while we've got him here? Otherwise, we certainly can end early. But while we have the expert on the Zoom call, I'm happy to let you pick his brain for a couple minutes.
I'll give another piece of information just as an FYI. It's for those that are issuing 1099s. 1099s are due to be filed if you're filing them yourself by the end of the month. It's important to know that if you're paying somebody by credit card, that person does not get a 1099.
Really?
So over the years, we've seen people get duplicates because the credit card processing company is going to issue a 1099 for whatever they pay out, which has only been happening like the last 5 or 6 years. So if you issue a 1099 and they were paid by credit card, the credit card's going to issue a 1099. So they're going to get, double billed basically by the IRS. So it's one headache you don't have. And the other thing is, corporations are not required to receive 1099s. So you don't have to go through the hoops to get all the information for a corporation unless they're an attorney. All right. Attorneys are a different story. Anything you pay to a 1099 to an attorney, if you're paying them directly and not via credit card, they get a 1099 for. But if you're an S corporation or a corporation or an LLC taxed as a corporation, that person does not need to receive a 1099, or that business doesn't get a 1099. We do see a lot of duplicates in that case. Sometimes it's not a big deal, but sometimes it can be a big deal.
All right. Any thoughts on 1099 employees in terms of qualifications? Is that, somebody's first saying, is credit card and PayPal pretty much the same thing?
Well, PayPal lowered it, I think, to $20,000.
Okay.
All right. That they'll issue it. So, but if they are issuing it and you're paying them through, so if you're paying them through PayPal, it's PayPal's responsibility.
Okay.
So I would not issue a 1099. And, when you get vendors asking for a 1099 and you're not required to give it to them, remember, we're all required to report the income that we receive, whether we get a 1099 or not. So all too often we'll hear, well, I need you to send me a 1099. Well, if you know the number, right, and you should know the number,
Right.
you're required to report whatever income you receive.
So the next question is, any thoughts on if the IRS will change the qualifications of 1099 employees?
So I'm not sure I understand that. So if you're a 1099, you wouldn't be an employee. Okay.
Right.
And if you're wondering, are they going to change like what makes an employee versus what makes somebody a contractor?
I think that's what she's asking.
Doubtful.
Okay.
Doubtful. And there are a lot of things that go into, what an employee is versus a 1099 contractor. I think the agency world, it's much cleaner than a lot of other industries. All right. Because those people typically do control when and where they work. But you'll see a lot of other industries out there where they don't have that total control and they're paying people as an independent contractor when they are indeed an employee. All right. But I think most agencies have that down pat. It is the new year. If you're using certain payroll services, you could pay your contractors if you want through the payroll service and they'll issue the 1099 if that's a headache for you.
Okay. Anybody else? Last questions for Craig? Craig, any last words of advice other than get with your tax advisor early and often?
Early and often, and it's early. Do it now. Okay. First deadline is March 15th. So I would do it now. The other thing, depending on what state you're located in, the pass-through entity tax is relatively new, and more states are on board now. We're up to about, I think, close to 40 states now have pass-through entity tax, and what that is that's the ability to deduct and pay taxes at the state level, at the corporation level, which gets you around a federal $10,000 limit per year. And there are a number of states where you need to make that election by March 15th to make it valid for the following, so for 2024, if you want to make that election, certain states like New York and New Jersey, you need to make that election by March 15th. Many states, you don't have to make the election until you actually file your tax return. And some states like California, if you don't make an estimated payment by June 15th, you're out of luck and you can't take the deduction. And this is a deduction that can save you, the more money you make, the more money it's actually going to save you in tax.
Okay. So again, lots of reasons to be with your tax advisor now about your 24 strategy.
Yes.
I know a lot of you are probably just making appointments to talk to them about your 23 taxes, but this is a place where proactive conversation and planning can save you a bundle of money. So speaking from personal experience. So, all right, one last call. Any questions for Craig before we let him go? You bet. So, Craig, as always, thank you for being so willing to generously share your expertise and help us stay on the short and narrow and true path of knowing what we got to do and when we have to do it. So thank you for your time and prepping all of this for us. So appreciate it.
Thank you.
And everybody, I will send out the replay for this. I'll send out Craig's deck itself and then the video as well. We'll have that for you probably early next week, mid next week at the latest. So watch for that through a member only email. Because remember, this is not something we're going to post publicly. This is just for you as AMI members. So, all right. Good seeing you all. Thank you very much. Have a great weekend. Thanks, Craig.
Thanks. Thank you.
Yep.
Bye.
Bye-bye.